Yeah, welcome to my blog trwstockbrokers.wordpress.com. I'll be talking on what the NSASI did on the 28th. I did promise I was going to show a video explaining what the current chart pattern is doing on the market for now. Day for yesterday, we did see the market take a huge bashing, falling below a support and resistance level. I did say the market has been trending between these support lines of about 20,300 levels and resistance of about 20,500 points. And every time the bulls hit that mark, they always come low. Second, they did it twice. There were two rebounds there and two resistance points before the final breakdown. Now let's go to the chart. And I explained what those charts were about. I call it flag and pennants explained. I did say flags and pennants can be categorized as continuous patterns. They usually represent only brief pauses in a dynamic market. They are typically seen right after a big quick move. The market then usually takes off again in the same direction. Research has shown that these patterns are most of the most reliable continuation patterns. These are some examples I did put here, which are flags and patterns, where if it was a downward trend, upward trend, you see those support and resistance levels at the spike high. But if you look at the NSASI, this is the pattern we are in now, which we call a downward flag pennant pattern, where you see support and resistance level and it gaps down, and you see such same thing. If you look at the NSASI, from what we are comparing, we are having virtually the same patterns. You see your high lows here. This was more like a flag down, it rebounded and down within this support level. So let's go to the chart and let me explain how I did write in my report. Now this is the NSC ASI we are looking at. I brought it flat, and I did say that the trend line, the end of the bull trend, ended this place, because the beginning of a bull trend is when you start seeing higher lows and higher highs, which we saw here. We did see higher low here, and then there was a form of double top formation. Double top formations, I always say, are reversal signals, which it's here. This was a resistance point for the NSC, and this was another support level for the NSC. Within that 2 period, the NSC found support, and before it broke out and found low around this area, which was now a support level, and it bounced off. And what happened next? It broke through that resistance stroke support channel and came back right within this area. Let's draw how to see support, 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 and then this was the other areas. You can see from here we have what we call our first flag, which is the same from this area. You can see something like that happening here, same thing. Okay, so going back to our chart, and anytime the market pulled back, it pulled back within this length from 20,885 to 20,600, which is the same, virtually the same length from here to here. So anytime it break out, it starts from the beginning of that triangle and drops. We did see a small rebound here, and we had the same pattern which we have up here, which is the same double top, yep, here, and the same double bottom. It's more like a pennant. After fighting this level, it broke down to a new low. Now I earlier said the bull trend ended here. This was the end of the bull trend, because from here we now stay. This was the highest we've seen for the year, and from there we started recording what we called the lower highs. There were no more highs again. This was the highest peak for the year, and instead we moved down to a support. It tried here, came down, and we've been trending lower and lower and lower continuously. So basically, and from the support level you can see what your index is doing. So a bull trend is when we record higher lows and higher highs. So this was where your bull trend ended. So what we are in now is, these are periods where we call them few flashes. These are more of short-term trading, where you take quick profit, you are in and you're out. So basically this is what a pennant stroke flag formation is all about. And from my RSI levels, my RSI divergence had already marked, giving me a sign here. After this sign, the next, you notice this high. When market made this high, RSI was already low. RSI was already giving us a low signal. So this low signal signifies that this was already a divergence, which we call a bearish divergence, because the price made a new high, but the RSI did not make a new high. So that is why we are having this divergence within this level, and within here you can see it's correct, because this was a high low. So there's no divergence so far. So what we'll be looking at now, we'll be looking at how, that's why from my report for today I did write I wrote about bargain hunting cited, and these are beginnings of people entering trades again. So until I'm convinced, I have a feeling we might see some few sideways rallies here before we might get to the next bearish turn. I hope the market doesn't come back to this level, because it's going to be sad after so much rallies from December and the period of February. We lost everything. We are now within this period of around 20 on the 20th of December levels. That's where we are now, this area. So, and that's why market did, during intraday trading, market did fall within this level, but moved back above and closed about 20,123. So for now I'm not too convinced that the market is healthy until we start seeing spikes above this level. There's 20,312 back to the former support level, which is now the resistance level. I will say, yeah, there's still money to be, but you have to be cautious. Now we're going to the NSE 30. NSE 30 virtually doing the same thing. These were the highs. This was the last. This was the last of the bull trend. This recording was that was okay. Sorry. Okay, that was 17th of January. That was the end of the bull trend. Why? Because all this level we're recording what they call higher highs, and we're recording higher lows. Even right to this section here, they were all higher lows. That was here, higher lows, higher lows, higher lows, higher highs, and this was when the market broke this trend line. When it broke this trend line, it shows them we're no more in that bull trend, because we now recorded what it broke out from the trend line and came down within this period of the double bottom formation. And now you can see we are following the same trend within this level. We are having support within around 920 and small resistance. So within this area we did see some spikes. You can see this was another bull trend until it broke that line again, and we market recorded what we called lower lows and highs. You see, one thing about technical analysis that if you draw your trend lines, you always make money in the market. You know when you're in and when you're out. These are just guidelines. You can see how I've drawn my support and resistance lines, which will guide you where and how you are going to trade. And the same thing I did say here. You can see that my RSI level, you can see how high it was there. The next high that came here, it made a low. This was a sign that the market was going to drop. This is what we call a divergence. Price made higher highs and then divergence made lower highs. This was a sign that you should start getting out of the market. Now if you look at the RSI level, we are within some support areas. That's why today's rally was more of bargain hunting. People saw opportunities of buying into what especially people that traded that sold on Monday. They took an opportunity of buying back into the market on Wednesday. So we still have 2 more days of rally, and we'll see how everything goes. The next what I'm looking at will be the NSE banking. The NSE banking is very active. We started this good trend in December. December was the good year. I can see from all my trend lines here, there's still no divergence. The charts are moving the same way, here to here, here to here, here to here, and this same high is going to be the same what we have here. So the possibility that if the banking sector ought to rebound, it's be rebounding along this resistance level to now make a support level. And if you want to see from my Fibonacci level, sorry, I'm becoming too technical now. My Fibonacci level, you see what happened there. From here to here, hit the 50% Fibonacci and rebounded. It did well, virtually 100%. So the pullback, if I'm looking at the pullback now, I will adjust my Fibonacci to this level and see. Okay, so we'll be looking at roughly 290.55, or it rebounds from here to continue that trend. But what the banking sector needs to do, that the 303 level will be watching if it will be able to break out from that level. I guess when the earnings season kicks in, we might see an upward trend, but I doubt, because all these rallies have made up for the earnings season in the sector. So for now, I think that we'll be looking at for the index. Later this week, I'll be taking you on individual charts. Bye and thank you.